This is the EURUSD, and currently you will notice that we are in an uptrend. It is a bullish move. All right, so we can then see the market is giving a form of pullback. So let's check the lower time frame, see how that is. All right, from this we actually see that market has been expecting demand, right, up to this very point, and now the market is seeming to be on the flip side, saying that supply is being expected over this zone. So on the lower time frame, which is the 1 hour, we see this happening. So demand zone right here that should actually see price go higher as filled, and now market broke downwards, tap into the zone, and supply is respected. And for that, we can also see what's happening here. If you should see this creepiness, this is engineered liquidity. Market should look to take out this zone in the future, right? So yeah, market should look to take out these zones in the future. They are basically done that way so that market is just going to plummet it anyway. So from this, I'm actually expecting more sales with what I'm seeing right here. Yeah, so I really want to get into a sell entry right now, and I don't know where would be the best opportunity for me. Well, I've been waiting for a long time, expecting that markets should react in this average year. All right, so I've been waiting for market to react in this average year, which I do get, and I see a break to the downside, taking this low right here. Now that tells me something, all right? So this is the 1 hour time frame. Now we go to the 15 minutes time frame. Well, now while a market actually did that, it created a supply zone. Okay, so it created this supply zone here, and let me just put it that way, like this. So and now we see that before it did that, market actually like created a range before it actually take it out, and now finally market has gone to take out this high that it created at this point. So if we should straight that out, we can see that market taps into a supply region at the top before taking out this low right here that should see price go higher, at least if it is meant to go to these levels here. So one thing that we can actually get from this is we can map this as a point of liquidity, and this side a point of liquidity. All right, so rather right here a point of liquidity, so from here to here, and then we do get another movement from here to this point here. So yeah, and let's just call this A, B, C. So the text that's A. I'll make it bold. So yeah, I'm mapping it as A, B, C. So we do get a movement from this point to this A, then this A divorce this liquidity here, and this one here to give B. Now this goes on to take out the liquidity at A. Now with what we're seeing in C, C has given a touch and a touch over this zone here. So with that, we kind of expect that market will come into this zone. So this is a order block that should have seen price tap into and go upwards, but that isn't what happened. So this will then serve as a breakout block. Now this is just following the last video I did on here on this place here. So we can have this as yeah, this is our POI region. So that's our point. So we are using the breakout block. We want to sell this because I have lots of piles of liquidity to take over here. So I will set my sell limit at this point, then my stop loss around there, so 15 pips. Let me draw that line. Alright, so we do have the entry at 10.1045 that way. So Yeah, so I'm using the main threshold of the breaker block anyway, so that's just it. How it will go. So let's see how it is on the 1 hour time frame. And here on the 1 hour time frame, we actually see that it's a bearish order block, all right, that should see price that actually tap into liquidity above this A and into a supply region following the FVGF. So we should see price tap into the bearish order block and probably go on to take the liquidities down here. I think I actually dragged this too much. This is not the region I was expecting. It's right here. Okay. So yeah, I'm expecting market to just take out these regions here. So move on to my next draw on liquidity will be on this zone. So and market is actually heading to that area right now. So yeah, let me just go set it. Right, so we have this 15 pips, and yeah, I'm expecting a 1:6 plus trade from this. Hopefully it goes in my direction. So guys, we will see how it goes in the end. Welcome back, guys. So following the trade of EU, this is what eventually happened. So let's go. I see the success of the trade already, but for a big cap, first of all, we see that we do get this pattern, and we're expecting to clear the liquidity marked here. So we see the ABC pattern talked about in the previous video. So we see B forming and then B going on to print out C after taking the liquidity at A and tapping into the external liquidity here. That is taking A as our internal range, and this is the external supply where liquidity is. Okay, so we see market tap into the zone, then C goes on to give a cut right here after taking out the breaker block here. All right, so it's expected to take out B in the future, and we know what we are trying to clear at this zone. All right, so what we actually see is after we get this cut here, the ideal entry is actually at this zone, because more than likely market will not go into the zone to tap into the supply zone created there that gave this imbalance. All right, so we added 15 pip stop loss. We can see how close the market actually went close to getting between this trade on a 1 hour time frame, and that is following the order block. Even at times you might have your stop loss here following the volume, but then considering the last price leg of A, looking at another type of trading strategy, you expect that markets will get to that zone at least, and then give a reaction before falling. Okay, so that is what we get right here. We see market trade into the zone, and then what we see is we get this imbalance from that to tell you that the sellers are deeply in this market and they want to see it go down. All right, so let's say your spread on your broker actually messed you up. You got close to it, not on its chart right there, you got stopped out. We do still get another set of entry, and where is that? There, if we go take this out here, we actually let's see on the 5 minutes time frame. Let's stick to this. Okay, so on the 30 minutes time frame, we actually see this pump after the movement from C. After market tap into the zone, we're expecting the it to respect the breaker block here, but it tested deeper levels. So our entry will be from the imbalance formed while it fell from our entry in C. Okay, and your stop loss at this point will definitely be above the high here. So that's another 15 pips, let's put it that way, and your entry is still the same as the earlier 1.0645. And what do we see happening? We see price plummet from that zone itself. Okay, we see price plummet from this zone itself, and our target has been taken. And what do we get from this trade? We still get 1:6.5. Okay, 1:6.5. Now if you look at the higher time frame, that's the 4-hour, we will see something. Now what I actually marked at here, the engineered liquidity, if you should look at it on a wider scale, this is what you get. Okay, I think that was what I was speaking that earlier. So this is what you get from this. There is still more liquidity to be taken out, and this is not a financial advice, but it is still expected that we have an imbalance from there. So market might look at to take out liquidity that has been building up above this highs here, and then tap into the FVG, give you some form of reaction, and then you possibly get price movement like this, taps into the space, give a form of reaction which we can ape into, and then we finally take out the lows from there. We get into levels like this. All right, and I'm not going to be greedy. We still have a bunch of things that we might actually consider to take out downwards, but considering the overall structure, this is a more ideal TP. Okay, so we might not even have it that way. The goal is just to take out this lows here and tap into the imbalance from there while creating this upward movement. Okay, so that's it, guys. Do take care, and please, if you like this video, please do not forget to subscribe and do share to your fellow traders. Thank you. See you in the next video.